Hey, what's up guys, John here. Last month, new legislation was introduced to ban Wall Street and hedge funds from acquiring single-family homes and turning them into rentals.
Introducing a new bill that would ban institutional investors from buying and owning single-family homes in the U.S.
So went as far as saying that they need to liquidate their entire single-family portfolios inside of a 10-year period.
It requires hedge funds to sell at least 10% of their single-family homes that they currently own to families per year over a 10-year period.
Well, yesterday Wall Street responded. Blackstone. They acquired 38,000 single-family homes and apartments to turn them into rentals all throughout the U.S. and Canada. This is only just a drop in the bucket. I believe what we're going to see over the next couple of years is going to be a mass consolidation of single-family homes and apartments all throughout the country. In this video, I'm going to break it down for you and show you what's going to happen next and show you why it's so important for everyone to try to own a property, own a house, get into real estate over the next couple of years, and buy deals based on really good entry points. You don't want to buy at today's record high prices. You want to be strategic when you go out there and buy. I'm going to show you how much they're buying deals for so you can get an idea as to where you should try to enter. You should try to enter at a really good price to where if the market crashes 10, 20, 30, 50%, you're not getting absolutely devastated. You're going to just simply be able to weather the storm and just ride it up to the next deal. Because during the hard times, it's even easier to acquire great deals. I'm going to show you what's going on. Please hit the like button. When you hit the like button, YouTube will share the content, educate more people about what's happening in America. And if you'd like to fix your credit, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, Blackstone. Wall Street landlord phase is back on as Blackstone's $3.8 billion acquisition of Tricon rouses a slumbering institutional investing sector. Housing math wasn't mathing for many years in 2023. Mortgage rates, home prices, low inventory levels made it both unattractive and increasingly difficult to buy a home in the U.S. It was far from a cry before the pandemic housing boom and an institutional investing home buying frenzy. Just 3 years before the era of historically low interest rates, easy access to capital, as well as rising rents and home prices all led to a frozen housing market for both consumers and institutional investors. However, that just changed. This $3.8 billion deal, they bought a $3.8 billion deal, they purchased 38,000 houses, right? 38,000 houses. So how much are they buying these deals for? Well, they're buying them for $100,000 a door. Just for context, $100,000 a door. Where are you buying a home for $100,000 in America? I'll tell you where you're going to buy a home. You go to Camden, New Jersey. This house right here is $79,000. I mean, this property, $79,000, and I mean that's kind of in the price point, right? $79,000. I mean, in the same exact neighborhood, you can get another house for $129,000. Camden, New Jersey, if you don't know where that is, it is not the safest neighborhood. It actually was ranked one of the most dangerous communities in all of America just a couple of years ago. It's very, depending on, of course, the little pocket you go in Camden, it's somewhere you wouldn't want to walk at night. Let's just put it that way. This is the neighborhood. So when you're buying deals for $100,000 a door, $100,000 a door, what you're actually getting, I mean, look at this. Look at that. What you're getting is, for Blackstone, an absolute steal. Because if that's their cost basis, they're buying these deals for $100,000. They're going to turn around and rent them for $1,500, $2,000. Well, what's going to happen, right? They're going to make an absolute fortune. They're going to make an absolute fortune. And so what Wall Street is doing now, it says Wall Street landlords create build-to-rent neighborhoods from scratch amid low housing stock. Wall Street firms that are finding it harder to buy up single-family residential homes in existing neighborhoods are putting their financial muscle to work by creating build-to-rent communities. There are over 900 neighborhoods nationwide that each boast an average of between 135 and 150 homes that were designed with the intent for institutional investors would own them and rent them out to single families. Around 10% of new housing construction is done with build-to-rent model in mind. The new homes come equipped with modern flooring and finishes that were designed to withstand years of wear and tear, thus saving the companies a hefty sum of maintenance costs while also being attractive to tenants. Like most businesses, Wall Street's real estate investors are looking at the economies of scale. If you can buy one plot of land, build a similar style house with similar materials, it becomes much cheaper and cost effective for your outcomes. The push to build entire communities from scratch has increased as high interest rates cut down on the inventory and fewer homeowners are willing to put their properties up on the market. So it's fascinating too. When you buy in a neighborhood and you build out new construction apartments, they're getting home insurance if they have mortgages, which I'm sure they have mortgages. Homeowners insurance on new homes is 53% cheaper than on a new home, right? So they're saving on insurance costs, which for property owners that have high insurance, let's say $200, $300, $400 a month, and they're coming in there buying deals. Maybe they're doing it for $100,000 a door, $125,000 a door, paying 50% less on insurance. They're not getting 7% mortgage rates. It's Blackstone. It's these big companies. They're getting much better interest rates. What do they have? A massive advantage. They can undercut the market, right? Driving rents down, bringing forward a really big problem for mom and pops so they can further move in and acquire more and more and more deals. That's what's going to happen here. So this shares of Blackstone's biggest suburban landlords are up today. Blackstone said it would pay $3.5 billion for Tricon. So $3.5 billion. So they're reporting $3.8 billion. So on $3.5 billion, what I initially had there, they're paying like $91,000 a door, $92,000 a door. And so they made a deal with Canada. They said, so Blackstone's return to the rental housing market is a vote of confidence for the sector that's the world's largest property investor, helped launch after 2008 mortgage meltdown. Blackstone rolled out Invitation Homes with a buying spree. The ensuing foreclosure crisis made billions of dollars. So they made a deal with Canada to where they're going to be able to get some really favorable terms. So Justin Trudeau, for that division for Tricon that Blackstone just acquired, it's going to turn out to be a big win for them that a lot of mom and pops aren't going to get access to. So it's very interesting. When you see Wall Street's growing housing stock prices out Latino renters, and then you see these headlines, institutional investors may control 40% of U.S. single-family homes by 2030. They bring out these headlines saying that we have an affordability crisis, we have all these problems, but then they allow Wall Street to just acquire homes by the tens of thousands. What do you think will likely happen? What do you think will likely happen over the coming couple of years? A really good way to look at this, I believe, would be looking at Facebook, for example. You might say, how does Facebook have anything to do with housing? Well, Facebook has a very, very low cost of customer acquisition to put a business owner in front of a customer. 2012, 2013, basically free. You can get in front of millions of people for pennies on the dollar, compared to today, where it barely makes sense for most businesses to advertise on Facebook. And why? Well, because they're extracting as much cash as possible out of that business owner. What do you think will likely happen if this does, in fact, go on, where 40% of all single-family homes are owned by institutional investors? Well, it doesn't take a genius to see. They're going to extract as much cash and capital out of every single unit that they have. That's what's going to happen. And so what I believe is going to happen is we are going to start to see over the next year or two, we're at a 50-year high in apartment construction right now throughout America, and we're seeing rents starting to soften. I believe over the coming year, 2 years, we're going to see rents take a dive, and it's going to put a lot of pressure on mom and pop landlords, institutional investors on the smaller side, a lot of REITs, a lot of leveraged investors that have bridge loans, hard money loans that aren't going to be able to weather the storm. These Wall Street players like Blackstone are going to keep rents somewhat soft, and it's going to put more pressure on everybody else, and they're going to go out there, acquire up market share, and then they're going to jack up rents sky high. That's what I believe is going to happen. And if we walk into a world with a universal basic income, which I believe is without doubt going to happen, without doubt, I believe that is going to happen eventually. It's not a matter of if, but a matter of when. But if they know, let's say, for example, that each household is receiving $3,000 or $4,000, do you think they're going to charge $500 a month for rent? $1,000, $1,500? No. They're going to charge basically what people are receiving. That's what they would charge. It might sound far-fetched, but that actually happened. There was a case study of a former universal basic income pilot program that happened in the 70s where landlords found out how much the tenant was actually receiving, and they increased the rent accordingly to essentially absorb the money that the tenant was receiving. So what do I suggest? Put yourself in the strongest position possible. Buy real estate at a good price. If you think your market is really high right now, I think most markets are extremely overpriced, and I think we're going to see a lot of pain coming in 2024 and 2025. Put yourself in a position to get funding. Put yourself in a position to invest in real estate, be in a great business or have a great job, but put yourself in a position to own. The last thing you're going to want to do is likely rent from a Wall Street hedge fund that's buying up everything, because they're going to extract all the opportunity that you're making from your job in the form of rent. What do you think about this entire situation? Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself for this opportunity, if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free strategy session. Catch you next video.